and CEO of HDFC Securities to take this forward. Now, over the past 30 years, Mr. Relli has engaged closely with how Indian investors think, behave, and evolve across retail markets, institutional flows, and, of course, structured advisory platforms. From retail participation to the rise of guided advisory models like HDFC True, his experience reflects the changing face of Indian investing itself. He now joins us for a timely conversation on India's wealth moment amidst global uncertainty. Please, Prashant, take it away.
Surbhi, thank you so much for that again. Dhiraj, great that you could be here, and great that HDFC True has come on board on the CNBC-TV18 Prime Circle platform in that sense. Really, really great to have you on board. Manny was just talking about how CEOs are in wait-and-watch mode. Investors are not. I mean, they're jumping right in, looking through all the uncertainty. We have heard from, George Yeo, the ambassador. We've heard from Manny how, the world is in a bit of a turmoil. But, just look at what markets have done. Looking right through all of it, global indices like the S&P just a couple of percentage points away from all-time high. Markets in India have done phenomenally well. Retail money is pouring in. But wealth as a segment is also exploding, Dhiraj. So what do you attribute this phenomenon to?
I think, Prashant, first of all, kudos to all stakeholders for putting up the CNBC Prime. I think all of us were yearning and looking forward for a global perspective in Indian context. So to that extent, I think it's a great initiative. So thank you for that. Talking about the Indian investors and even global investors taking contrarian views and staying investing or even increasing their investments, my take is that, somewhere in last 3 decades, investors have learned and developed a stomach to navigate the volatility. They've seen the COVID crisis, they've seen financial crisis in 2008 and 9, and we have had, many accidents in Indian stock market prior to that. So to that extent, they have seen that there will be a volatility in the market, but somewhere there has been an acceptance of equity as an asset class, and the theme of financialization of saving is something playing out and is on the cusp of exponential growth.
No, absolutely. And, the belief that things will work out at the end of it, right? Maybe in 10 days, sometimes maybe in 20 days, maybe in a couple of months, but that's been the experience. So that sort of a recency phenomenon is there, but it's not so recent. It's worked out in that way for the last few years now. Wealth as a segment, Dhiraj, what's happening there? Because in the listed space as well, when you talk about capital markets as an ecosystem, you had AMCs, you had brokers, exchange, and maybe exchanges going forward, and then there are wealth companies. And that is a segment which has really come into its own. And these are ultra high net worth individuals making bets, putting money to work. What's driving that phenomenon, that segment really?
I think it's attributable to many areas, and I would say the culmination of rising affluence. Just to give you an example, in 2022 we have about just 8 lakhs investors with the 1 million plus kind of wealth. This is growing at 16% CAGR, and now going to be in 2027 about 17 lakh investors. Maybe it will reach to about 2.5 million investors by 2030. In Indian context, when we have a 1.4 billion population, this looks to be a very small fraction, but this is the people who are currently having an asset pool of $1 trillion and slated to go to $2 trillion by 2030. So we are seeing the rising affluence in India across all across the pyramid. We are seeing in the top income level also, at an ultra HNI level also. We are also seeing at the mass affluent and middle income level also. And financialization of saving as a theme is playing out. I can substantiate this with few data points. Look at it, our mutual fund AUM. In last decade, it has grown by 20% CAGR, now 75 lakh crore. I don't think so 10 years ago, if had we spoken about the mutual fund industry, we would have ever imagined that we could reach to a level of 75 lakh crore kind of mutual fund AUM. It used to be just about 11% of deposits. Now it's 30% of the fixed deposits and liabilities. So to that extent, we have seen the financialization of savings have been playing out. In fact, SIPs have been growing at a 2% CAGR per month for last 5 years. And if we extrapolate that number, it will be a 1 lakh crore per month in 2030. And I wrote an article about it 6 months ago and called it as an equitization of savings. So other than this, I think there are two more factors that are playing out. One is demographic dividend in terms of investors. The average age of Indian investors is just about 32, which clearly means that they have a runway of 25-30 years to earn and invest. So that's something which is very different than most of other countries in India. And also, we have had a regulatory tailwind in last many years. I think most of us crib about the cost of compliance going to the roof, but there has been a regulatory tailwind. We've got T+1 settlement, we've got, RIA guidelines, we have got clearly enabling ecosystem to digitally onboard the customers. Today we acquire 100% of our customers through a 5-minute, 6-minute journey. These are all a big enabling ecosystem. In fact, SEBI has corrected the expenses that can be charged in a mutual fund scheme, recategorization of various schemes and streamlining them. So I think there has been a plethora of initiatives by the regulator also to make ecosystem more congenial for growth.
As they say, games beget gains, right? And there's also been a bit of a virtuous cycle. Stock prices have gone up. I was looking at data, 2023, 2024, promoters have sold in aggregate about over 1 lakh crores of their equity. So when they raise this money, and this is anecdotal and you would have better sense, a lot of it gets recycled back into the market. I mean, that those assets which are raised through selling, their stakes, whatever, I mean, small stakes in their companies because it makes sense to, a lot of it comes back into the market, and that is wealth which needs to be managed. Dhiraj, do you see that as well?
I think promoters are currently leveraging the opportunity that the markets are at levels which are good enough for them to monetize a fraction of their holding. There is nothing wrong in the same, and they are again deploying the money into the different asset classes only, and mostly in a real estate assets. Particularly in Mumbai, we get to hear about the large deals. A promoter A has sold his few percentile securities and invested in a large real estate asset. But that's okay. I think that's also going to the markets only. In fact, it's remaining within the system. It's not going out of the system at all. So it's bringing in more velocity rather than, any other thing. I don't read too much about between the lines on why promoters are selling small stakes. In fact, India is one of the large market that has given exit to private equity also. Other than the US, there are no other markets other than India where private equity players are getting meaningful exits.
No, absolutely. And a lot of the supply also keeps, supply is necessary, right? I mean, if demand overwhelms supply, you basically run the risk of a bubble. So supply is absolutely necessary. HDFC True as an offering, Dhiraj, I think is about, 4-5 months old? What's the pitch here? What do you want to do? What's the vision as you sort of, expand into wealth in a big way, Dhiraj? What do you bring to the table?
See, there has been some kind of a trust deficit that is there in the wealth management ecosystem. We believe that we are building the HDFC True on the bedrock of two pillars, honesty and expertise. In last 25 years at HDFC Securities, we have developed a distinct expertise in the equities and other asset classes, domain knowledge about the capital market ecosystem. So we believe we are well poised to advise our customers and at the same time bring in the transparency in the fee structures. And in HDFC True, we offer advisory services at a fee and do not earn anything from the manufacturers, which clearly means it's a very transparent way of serving our customers. And also, as per regulatory framework, registered investment advisors can not only service investors on regulated products, but also they can service them on products that are not regulated by SEBI. For example, unlisted securities, private market, global investing, advising customers on their legacy planning, trust, etc.
And maybe REITs, right? What we discussed earlier on. Dhiraj, we wish you all the best of luck to you and your team as you execute. It's a pleasure to have you on board the CNBC-TV18 Prime Circle platform and look forward to many more. Thank you very much.
Thank you. Thank you.
Thank you very much for that. So more choices, more asset classes, and hopefully more wealth for all of us here. Well, thank you, Mr. Relli, for that interesting conversation. This evening.